Well, good morning, everyone, and welcome to our webinar. This is part 2 of our webinar series. If you missed our first webinar on the 15th of September, you can watch the recording on both the Grosvenor Wealth Management and the OPUS websites. Today, we'll be going over the issues in repositioning businesses and personal wealth in a post-pandemic world. I'd like to introduce myself to you all. My name is Nick Hood. I practiced as a chartered accountant for over 40 years and as a licensed insolvency practitioner for over 20 years. I'm a senior advisor at OPUS Business Services Group, and I'll be your host this morning. For most successful businesses, turnaround is a constant process of assessing where they are and working out what they need to do to get to the next objective. Complacency just isn't a part of their DNA. The pandemic has now come along and shaken pretty much every UK and global enterprise to its core, disrupting business models and threatening them with the sort of new normal they hadn't even dreamt of before. I'm pleased to say we have 2 expert panelists to share their experience and thoughts about these frightening new challenges. The first is John Thompson from OPUS Business Advisory Group, who will discuss strategies to recognise the changes that the pandemic has brought to businesses, to come up with the right ways forward, and how to maximise and then realise your business asset in this brave but uncomfortable new world. Then we'll hear from Matthew Bourn from Grosvenor Wealth Management, who will discuss how you can align your personal life plan and retirement to business succession and exit. We're open to all questions from our audience today, so I encourage you to please submit any questions you have to our speakers through the Q&A function. You can do this by entering them in the Q&A box on the GoToWebinar menu, and we'll answer them during the session after our panelists have given their presentations. We'll also be recording this morning's webinar, and this will be sent to you afterwards. Before we start, I'd just like to point out that Grosvenor Wealth Management Limited is authorised and regulated by the Financial Conduct Authority. What will be discussed during the webinar is strictly general information guidance and is not intended to constitute investment, tax or legal advice. Tax is down to personal circumstances and may be subject to change. So having done the boilerplate stuff and introduced everyone, welcome again to all our attendees, and without further ado, I'm going to hand over to John Thompson to kick us off. John, it's all yours.
Well, thank you, Nick, and good morning, everybody. I just wanted to start off by giving some background just to myself and give some context to the last 18 months we've all lived through, with the world having just experienced the biggest global pandemic in living memory, and all aspects of business life as we knew it have been changed, possibly forever. For my own part in this, I'm passionate about helping businesses turn around their fortunes in challenging situations, none more so than right now, and I've done this successfully for many years, both for 2 of my own businesses and for many clients in an advisory capacity. I just want to say I really love what I do. So I just want to move back to the current backdrop and just talk a little bit more about the situation we find ourselves in. Yeah, and the majority of business sectors have been adversely affected by the impact of the virus. The subsequent reduction in demand, the disruption to supply chains and changes in buyer behaviours. Existing strategies are unlikely to be appropriate as we return to some form of normality. Flexibility, adaptability and coordination of resources will be key to business success as we move forward. The best strategies I've always found maximise the opportunities in a company's chosen market and create a sustainable stream of income and profits for years and decades to come. These best-in-class strategies are created both to fit within an external environment, the world we live in, which has changed very much, and then to achieve a healthy competitive advantage in that chosen market. By definition, Both these environments are changing by the day, never more so than right now. And that's why successful businesses are constantly reviewing and upgrading their strategy to fit with these movements. Agile businesses that can adapt quickly to these changes in trading conditions are invariably the top performers. This right now is a critical period in the post-pandemic rebirth of business activity, where many businesses will want to change the focus from pure survival and being reactive to being proactive and identifying the inevitable new opportunities as they present themselves. We believe there will be an adjustment away from our previous drive towards globalization and complex supply chains back to onshoring, where more of our products and services are locally sourced. Those businesses that are well prepared and can adjust quickly and effectively to the new normal will not only survive, in our opinion, but also then move on to flourish and prosper. We strongly recommend that all businesses carry out a post-pandemic strategic review that seeks to assist in both finding these new opportunities and also helping them adjust their business model to maximize the potential of this new potential revenue. Just want to move on to recommendations now for the strategic review that we're talking about. And the first part of this will be to review the existing business model. And here what we'd seek to do is to check the suitability both pre and post-pandemic of the model. 2019, pre-pandemic, as I'm sure we all recall, was a difficult year in any case, with many businesses struggling through the effects of waiting for the decision on Brexit. And of course, we had the general election at the end of the year. We would then seek to move on and assess the response to the pandemic so far. Have the directors been proactive? Have the management team sought to look for new opportunities and move the positioning of the business? Or have they simply responded to events as they happened? It's difficult. It's been a really difficult time for everybody. I well understand how difficult it's been for management teams to be able to take a strategic view when there's mayhem and fires going on all around them with the ongoing effects of the pandemic. So we'd seek to assess the response there. We'd then move on and seek to evaluate the potential opportunities in the post-COVID world within the chosen market, within that business's chosen market. And I'm just going to come on to a bit more of that in a moment, if you don't mind. So if we could just move on to the next part of the recommendation, which is analysing how the existing business model could be adapted to facilitate these opportunities, and then develop a step plan to implement all these necessary changes. Just a little more on that. All businesses have their own resources and capabilities that work together to give them their core competencies and competitive advantage in their marketplace. In my experience, very often these resources, capabilities and core competencies can be reconfigured to provide a new product or service at little or even no extra cost. And that's what we'd be seeking to look at here. We could just move on to the next section, which is assessing the financial implications of the survival and rebirth phases, and update financial forecasting as appropriate. You might think this, of course, is a given, but it is key to the success of any new plans and should play an integral part of the review as without the right finance, it would be difficult to put any plans into place, if indeed the finance is needed. And finally, as part of this review, we would advise conducting a review of the organization's inbuilt sustainability and resilience to protect against the next global crisis, whether it be a pandemic, war, cybercrime, terrorism, trade tensions, civil unrest, or climate change related issue. This planning with regard to sustainability and resilience is key to all organizations. Many of the larger businesses are forced to do it as part of their corporate social responsibility. But it's of course important to all businesses and should be done particularly in these times. Just going to move on now to the strategic options that I mentioned earlier on. I'm just going to give a little bit more on some generic options that we've developed over the last 12 to 18 months with businesses and their strategic options. So number one, so obviously it's moving from being reactive to proactive. And number one, where we've got the same products, but the business operates through new channels. Very obviously, many businesses have chosen to dispense with much of their physical resource and their presence on high streets and the like, and move to online channels. This is something that is of course open to all of us and has been utilised by businesses really moving forward now in a very positive way. There is still lots and lots of potential here for many businesses who haven't historically had a strong online channel, and there is much advice and support available here. Just a couple of quick examples of moving online, not just products being marketed through online channels, but just a couple of examples where Nike in China and throughout the rest of the world, I believe, developed a range of at-home workouts at the height of the pandemic, and this really drove their business forward at a significant rate of knots, with a significant increase in turnover. Then another couple of examples, a number of wine businesses have moved to online tastings, which is certainly a proactive route forward. And there's a whiskey business that I know that took to delivering tasting kits to potential customers, which was a very smart move in my opinion. Then just moving on, the same infrastructure to different products. Again, very obvious, GM, Ford, Dyson all moved their production capability into making ventilators. LVMH, the perfume business, Pernod Ricard, the drinks business, all moved to making hand sanitizer, and now have a new core competency if and when needed. There's another bit of fitness training business called Huami, who developed through their fitness watches. They developed an early warning system for pandemics, which they based on data they picked up around Wuhan in the early stages. Last thing, same products, different infrastructure. This one is obviously for the height of the pandemic, when businesses had very, very high demand for their products and services, like Amazon, and needed to augment their workforce. Amazon did a deal with Lyft, the car company, car sharing company, I think, in America. Scandinavian Airlines provided their workforce to the country's health provider. EasyJet provided people to the NHS, and Aldi did a deal with McDonald's at the height of the pandemic to use all their staff. So there's many strategic options available in it as part of that review. I just want to move on now to a slightly different subject and speak a little bit about maximizing your business asset post-pandemic. And I've broken this down into a few sections. The first part of this is what I call becoming chairman. And we don't have to literally become chairman, but it's the owner manager of a business, the leader of the business, moving to a more oversight type role. And there's two benefits here. Number one, it will, as we all know, will significantly increase the value of the business, where there's a management team in place that are taking the decisions as a collective rather than everything revolving around one person. This will significantly increase the value of the business and very likely improve the performance of the business. The second benefit is that the owner manager can start to take a more strategic view and also potentially start to enjoy more balance in their work and personal life after many years of hard graft in taking the business to where it is. All of this takes a lot of planning, and you need to create a succession plan, and you need to be able to pull through the management team where they're all brought into this plan and now start to become empowered to make business decisions that would previously have gone to the MD for authorization, and as we mentioned previously, everything revolving around that person. This structure can then lead on to the next stage, which is after a period of time, and this is probably 1 to 2 years, in creating a situation where the management team can start to look at taking shares in the business, and the owner manager is able to enjoy the benefits of the facilitation of the MBO and or a trade sale. With the MBO, of course, there are many tax advantages here, both for the seller and for potential purchasers. There are many routes here: an enterprise management incentive, an employee ownership trust, all with significant tax benefits, and creating a seamless route through for employees to take a stake in the business. I also mentioned trade sale there. It could be that the management team are not interested in taking the business forward, but with the broader management team in place, the business is much better placed to start facilitating a trade sale. And then finally, we look at continuing income. The owner manager who's led this, who's taken more of a chairman type role, who's created the succession plan, agreed an acceptable deal with the management team, he could then benefit from a partial sale of the business, probably paid for over time, unless the management team have sufficient money to pay the consideration in cash. So let's say that the owner manager sells 50% of the business to the management team and receives a monthly payment over the next 36 months to pay for that 50% share. He or she would keep their salary for the chairman role, whatever that is, maybe on reduced hours, may not be, but a payment would still be received for that over and above the ongoing repayments for the business. Let's say the team then, given how they've been empowered and brought into the business and acquired shares, they develop the business on at a pace, and they do then look at a trade sale in 2, 3, 4, 5 years' time. The owner manager having enjoyed his salary over that time for a reduced role, but also the repayment, also the payment of the consideration for the business. And then he or she would then benefit from the sale of the other 50% in a trade sale. And this would hopefully be very much a win-win situation for all parties. Thank you for listening. As Nick said, any questions I'll be happy to take at the end. And I'll now pass you over for our next speaker.
Lovely. Thank you very much, John, for a great explanation of what makes for a good and a successful business repositioning in such uncertain times, and how it can help to maximise and then realise your business assets. Now I'm delighted to introduce Matthew Bourne to you from Grosvenor Wealth Management, who will discuss how you can align your personal life plan and retirement to business succession and exit. Matt, it's all yours.
Thank you very much. Cheers for that, and thank you for that nice introduction. Yes, good morning, everybody. As you said, my name is Matthew Bourne. I'm a chartered financial planner for Grosvenor Wealth Management, and quite right, looking at building a future plan is what we do here. So first of all, you've just sold your business. You have the money in the account, and what is next? What you've got to think about here is that selling your business is a big deal. Not only can it set you up financially, but it can also usher you into a retirement lifestyle that you've always wanted. It's important to have a plan. And there's an old saying that I'm sure you've heard before, that if you fail to prepare, prepare to fail. Too many business owners don't have a plan. And in fact, only 4% of business owners have a formal written life after business plan, which is a testament to the lack of post-sale preparation and thoughtfulness within the entrepreneurial mindset. So it's important to build a plan. So when building a plan, what do we have to look at? We have to look at what it is you would like to do. So do you want to retire and stop working full-time? Do you want to work a little bit part-time? You've worked for a long time, you've worked hard, you've built up your own business, you've sold that business. It's unlikely you're going to have the mindset to just stop. However, some people may feel they deserve that. You've got to look at travel. What sort of travel do you want to do? Do you want to be traveling the world? Do you want to travel to the end of the garden and back every day? What are your plans? You then got to consider, would you like to buy another business? So would you like to have a new venture, a completely different type of business? Are you more inclined to spend more time with family and friends? Have you got any grandkids that have turned up? Have you got anybody that you want to go and visit? And also a dream hobby. Many people that I know in the entrepreneurial world play golf, and a lot of them, when they do come to selling their businesses, they do end up playing considerable bouts of more golf, but it ends up traveling to play golf, and they could end up in Cyprus or Australia, who knows? So to consider your options, think about what you want to do and how your newfound freedom will be used. Once you've figured that out and you've looked into that and you stop working, you then need to consider about how much your costs will be each year. How much is your new living costs going to be? And how sustainable is that income? It's really important to look at that and understand, if you want to have a new lifestyle where you're going on 2 or 3 holidays a year, you are playing golf 2 or 3 times a week, you're not working, you're taking the grandkids out, how much is that going to cost, and how long is that sustainable for? You then need to look at how you can help that be sustainable. You've got this lump sum within your your account, you now need to look at ways to invest that to make that more sustainable. You can invest in lots of different ways. And as before, this here today is not financial advice right now, but this is just a guide to some of the types of investments that are available. So you have an ISA. An ISA is an individual savings account, and you're allowed to put into an ISA an amount of £20,000 per tax year. Any withdrawals, growth, and income is all tax-free, and it's a good way to invest money for the longer term to help you get a return that will help your money remain sustainable. You've also got a general investment account that you can invest into. This allows you to use capital gains tax allowances and any dividend allowances, and potentially any savings allowances too. You've also got pensions. So that's looking at how can you take any of your tax-free cash from your pensions. What growth is in there is tax-free as well. And also looking at when you start taking income, taking that as tax efficiently as possible, because some of the pension income you take will be taxable, as only 25% of it is tax-free. You also look at then the fact that it's inheritance tax-free. So if you leave it to anybody and you was to pass away, that almost acts as a family trust in the sense that it will continue to go down to generations and generations and won't pay any inheritance tax on it. You've also got, for the slightly more adventurous people amongst us, you've got EISs, so enterprise investment schemes, and they offer tax reliefs to individual investors who buy new shares in a company. So these new companies, startup companies, they're looking to get out there in the world and open up and become this big successful business, and they're not listed yet. So therefore you invest in that and you get some exceptional tax reliefs, up to 30% income tax relief on investments up to £1 million a year. You get any capital gains tax free. So essentially any growth is completely free, so long as the shares are held for 3 years. Any previous capital gains tax that you've actually incurred can actually be deferred by investing into this EIS. And that's, again, a valuable tool if you're made a large capital gains. And of course, as well, if the shares are disposed of at a loss, you can then elect that amount of a loss to be set against any income tax of that or the previous years. Another version of events there is a VCT, so a venture capital trusts. And they're, again, fairly similar to an EIS, but they invest into companies that are listed on the London Stock Exchange and set up to invest in small UK businesses. And these, to encourage support for these businesses, the government again offer generous tax benefits for that VCT investing. So again, with this one, when you invest in new VCT shares, you're entitled to claim a number of tax incentives up to a maximum of £200,000. They include income tax relief up to 30%, as long as you hold the shares for 5 years. Tax-free capital gains. So if you decide to sell your VCT shares in the future and make a profit, then the proceeds won't be liable for capital gains tax. And also, very good benefit of this, you get tax-free dividends. So if your VCT pays dividends, then there is no tax to pay and you won't need to declare them on your tax return. You also need to start considering estate planning. So when we look at estate planning, there are some key points you need to look at. First of all, making the most of any annual exemptions for gifts. Now, we all know that when we gift people money, we gift it to them, and if anything happens to us within 7 years, then there's potential for that to actually fall into an inheritance tax bracket, and you would pay inheritance tax on the money that you've gifted. But there are some annual gift allowances you can do. So you can actually gift £3,000 a year to anybody you like, and it will not be added to your estate for inheritance tax purposes. Now, certain gifts don't count towards this annual exemption, so it's important that you get independent financial and legal advice on those. But also what you've got there as well is that you can give more annual gifts of up to £250 to as many individuals as you like, although not to anybody who's already received the gift of your whole £3,000 annual exemption. And then none of those gifts will be subject to inheritance tax. You can gift for weddings. Weddings can be gifted £5,000 or less if it's one of your children. Grandchildren or great-grandchildren, you can gift £2,500 or less. and any relative or friend is worth £1,000 or less, and you won't have to pay any inheritance tax on that money should you die within the 7 years of gifting it. You can also help have gifts to help living costs, and they won't be included in terms of an ex-spouse, an elderly dependent, or children under 18, or in full-time education. You can also give gifts from a surplus income. So as long as the fact that the gifts are continued, maintained, and regular, that gifts from a surplus income will also not attract inheritance tax. They're extremely complex, and therefore I would strongly recommend that you get financial advice on that. Also, what we need to look at as well is the pensions. So the pensions are outside of being state for inheritance tax. I mentioned this earlier, but depending on the type of pension you have, if it's a flexible access drawdown pension, you would be able to leave that to your family completely free of inheritance tax. There would possibly be some income tax payable depending on the age that you die. But again, this is something that I feel would be good to discuss on a one-to-one basis to understand your personal situation. So how do Grosvenor help when you come to this point in your life? And what we do is we offer something called a life plan. Now, a life plan starts with a base plan. This helps to ensure that your standard of living is sustainable, as I mentioned earlier. We then introduce any goals, aspirations, events. You may decide you want to help children with weddings or houses or buy new cars. And what we do then is plan to model different rates of investment return, different price escalations, and different investment conditions. We can introduce what-if scenarios and consider different outcomes and financial remedies by building in events, whether they are goals or inevitable circumstances. The life plan becomes a personal and valuable tool. And it also allows you to achieve a coherent and coordinated financial solution. And it's important to meet at least annually to review this life plan. And of course, we would also make sure that we were reviewing and analysing the performance of investments to ensure it remains on track and within your risk profile. But it's designed to give you a clear picture of your financial future. The life plan does provide a peace of mind that your financial objectives are achievable and your income is sustainable. All planning relies on present facts together with realistic assumptions about the future, matched against your goals and your aspirations. Your life plan is your personal financial map, and this is to keep you on track and adjust as your circumstances need to change, and it ensures your assets are put to best use and you'll benefit from our range of financial advice over your lifetime. Your long-term needs will require a robust and sustainable approach to financial planning, and a life plan is just one form, but a very important form of financial engineering which delivers this. Your life plan will allow us to provide a holistic advisory service which brings together a range of interlinking financial services to address your long-term financial needs and goals. At its simplest level, your life plan will project forward all of your income, growth and expenditure and will show you whether or not you'll run out of money. And we'll use your life plan to test against a range of decisions to find the best fit to achieve your financial goals. So myself here as a wealth manager will then recommend, introduce and monitor the appropriate financial products and investments aligned to your needs. It's important to remember there's no one set plan for everybody. So each person is individual. They'll all have their own goals, their own dreams and their own aspirations. And this can help really make that achievable. Thank you for listening today. I will now pass back and I'll see if there's any questions for us today.
Right, thank you very much, Matthew. Fascinating and such important points, so well made. I'm just checking to see if we have any questions. So if you have any questions, please do put it in the Q&A box on the webinar drop down. But I mean, pending that coming through, John, I've got a question for you, if you don't mind. I was just wondering at this stage, after such a long haul through the horrors of the pandemic, are you seeing any sign of battle fatigue among entrepreneurs? A greater rush to the exit, maybe an anxiety to find a deal perhaps a bit too quickly?
Well, thanks, Nick. It's a really good question. Yeah, yes is the short answer. A number of people that I've been speaking to and working with over the last 6 months have very much been looking at their business pre-pandemic as part of their pension planning, part of their income in future life, post work, and of course the pandemic has dealt a blow to many businesses as we discussed. So now we're just starting to come out. Yes, absolutely, there is a rush to think, oh well, I've had a tough 18 months. Yes, okay, the business might be worth a bit less now, but I've had enough, and I'm just seeking to move out as quickly as I can. Whereas with a little more planning, that owner manager could be in a much stronger position, even over a shorter time span as 6 to 12 months, with some planning, with some new strategy, with the succession plan that we spoke about. But yeah, I think people are rushing for the door a little too quickly.
Yeah, that's brilliant, John. Thanks. Matthew, I also wondered if I could turn that question round and point it in your direction, whether you're finding that your clients who are still business owners and managers, whether they're suffering from that same anxiety about what to do next, and whether their investment objectives are changing as they begin to emerge from the pandemic.
Yeah, no, very good question. Yeah, I think we're in a position here where at the moment, our clients are in a slightly different concerns because of the way that they're not sure about how performance will happen, how their life plan might be affected. The good thing is we are able to complete the what if scenarios of the life plan, and we're able to demonstrate to them how the pandemic has impacted thus far and how we feel it may impact in the future. And we can really then bring a sense of calm to the clients because of the way that we can adapt that life plan. And even if we can demonstrate how a negative return for X number of years could happen, and how would this impact you, and that can then give that client a sense of reassurance as to how things may be. Of course, as well, a lot of clients are concerned about jobs, which is again something that we've always sort of made sure that we advise our clients to have a good level of emergency funds in the event that anything did happen with any job or career. And therefore, a lot of our clients, or most of our clients, are now in a position where they feel quite comfortable if anything did happen, or anything was to change with regards to performance, and it wasn't to be as good as it has been over the last few years, that they would be comfortable. We also have to remember that investments are a long-term objective, and all of our clients are aware that a short-term blip in the current position won't affect their long-term goals. So yeah, there is sort of lots of questions coming, but a lot of their nerves have now been calmed down.
That's very encouraging and very reassuring. I think as we don't have any other questions, we'll begin to draw this to a halt. I just wanted to thank both John and Matthew for some really interesting insights into the roles they play in generating wealth, preserving it, and managing it. I was particularly attracted by the reality that nobody should ever imagine that either of these roles is a tick box exercise, and that there is no one size fits all, and that each situation, each solution, each recommendation, each plan is very much on a one-off basis, tailored to the circumstances. And I think from what we've heard, it's as well that we have experts like John and Matthew out there to help people. This is a really difficult time for entrepreneurs. Nobody should ever doubt that. So thank you to both of you. Thank you all our listeners for sticking with us through this. I know you're all busy, so thank you for devoting the time. And thank you very much. We'll hope to speak to you again soon. Bye-bye.
Bye. Cheers.
Bye.